Hello, it's Robert Miner with Dynamic Traders Group with our Saturday, November 10th video update for our YouTube viewers and subscribers. And if you like what you see, go ahead and subscribe to this YouTube channel because every Saturday we put up a new brief update. And so you'll be notified when we do that. And you'll learn something about trading. And we always look at immediate potential trade strategies for early the following week. And of course, also, if you like what you see, check us out at dynamictraders.com for our regular reports. These videos are just very brief compared to the much more extensive videos and more markets that I cover for our regular paid subscribers. But this is good information. I'm not holding anything back here. Let's take a look at a couple markets. And one I want to take a look at is the euro because I featured that last week. And last week, you can review that if you need be, but I made the case for how the week ending November 2nd was probably a weekly low in the euro. And so far, that low has not been taken out. But if we're going to take a look at the daily data, I think it's probably going to be taken out. And so we always want the market to be our guide, and we always want to identify what confirms our outlook for the market and our trade position and what would invalidate it. So here's the few days after last Friday. My cursor is on last Friday. And what happened over the next few days? We made Monday was just a bit of a minor decline, and then we're 2 days up. And the key day was on Wednesday. And as I had in our Wednesday report for our regular subscribers, is that this is not an impulsive in nature. It looks more like a correction, and we've already reached the daily momentums. We're dual look back overbought. We tagged the 62% retracement, the 100% alternate price projection of the last advance, and even the 100% alternate price projection of this small advance. And then on that day on Wednesday, the market, the euro sold off significantly. So I said at the time, and what turned out to be the case, this looks more like an ABC and not the beginning of a weekly bull trend, an impulsive trend. So what would indicate that indeed this was a correction and not an impulsive trend? Well, just to close below the closing high of what I got labeled a wave A. And so I just draw a horizontal line across the close. That's the high close at one spot 14.025. I like it to be red because we close below it. That means we're probably going to continue to new lows. And the next day, Thursday, indeed, we closed below it. So that voided this as an impulse trend. We call that overlap, and it indicates that this is either a completed correction or part of a correction. And since the high was made at exactly the 100% time and price targets of the last advance, which I now got labeled as a wave 2, it was in the perfect position to complete a wave C of 4. What does that indicate? What happens when a correction is complete? The trend prior to the correction should continue to a new extreme. So more than likely, even though the weekly momentums have been dual look back oversold, warning that we're near a weekly low, more than likely the euro has another few days sideways to down to below the October 31st low to complete the whole trend down from the October 24th high in an almost ideal Elliott 5-wave pattern, 1, 2, 3, 4. So we have to assume that's going to occur until it makes some sort of bullish reversal pattern. So on top of that, the daily momentums are bearish. They're not oversold. That alone indicates that there's probably at least another day or 2 or 3 sideways to down before the daily low is made. And dual time frame momentum position, when the weekly momentum have been oversold for 2 or 3 weeks. And then when the daily momentums reach oversold and make a bull reversal, that usually signals that a weekly low is complete. So that's what to be alert for early next week. There's a couple significant daily time factors beginning early next week. And that includes, let me just put this data up a little bit. Monday is the high to low, and that's one of the real key ones for potential daily low. But since the daily momentums are not yet oversold, that could stretch as far as the 14th, which is, what's that, Wednesday. So more than likely by Wednesday, the euro will complete a daily low, which should correspond with or coincide with a weekly low. This 127% external retracement of wave 4 is typically the minimum target for a wave 5, and we're clearly it certainly clearly appears we're in a wave 5 and we just completed an ABC wave 4. So look for that early next week and for a reversal signal, particularly if the market's sideways to down for 2, maybe 3 days and has exceeded the October low. Just be aware that that's probably the final minor decline before that low, higher time frame low, the weekly low, is complete. Well, this is the ES daily data. And again, last week I made a case for Friday, November 2nd as having the potential to be in place to be a short-term daily high. Followed by a correction lasting 2 or 3 days. The warning is that with the U.S. election on the following Tuesday, and a pretty emotional election in the U.S., is that I advise don't make any trades until after the election, because who knows how people are going to react to the election. So two things happened. Number one, even though this was in a technical position to make at least a daily high, it would have been a minor wave A high, is no reversal signal was ever made even on the intraday data. And we all know what happened after the election. We had this huge up day. It came right up to the 61.2% retracement, which was ticks from the wave 4 high, and then sideways, and then we made a daily momentum bear reversal. So we've now completed what we call a wave A high, and we should have a corrective decline for a wave B low, and then we should continue the bull trend for another couple weeks, more than likely. I'll go to the weekly here real quickly. The weekly momentums are dual look back bullish, so we haven't completed the correction off this low from a couple weeks ago. We should have another 2 to 3 weeks sideways to up, but it should not exceed the September high because it is a corrective advance, and in fact it typically would not exceed the 78.6% retracement before the next section down begins. But we got another net couple weeks anyway, sideways to up. So this daily decline, which should last 3 to 5 days, should just be what we call a wave B correction, followed by a continuation of the higher time frame wave 2 or B corrective bull trend. So here's a couple things to keep in mind. Number one is a typical correction to a wave A reaches around 50 to 62%. And that 50 to 62% retracement overlaps with this swing low from last week. So that'd be a good area if the ES reached around 27.11 to start looking for long trades. The other thing to look for is that since the daily momentums are in that our dual look back bearish, we should have again another 2 to 3 days at least sideways to down before we complete a corrective wave B low. Another thing to consider is this would be Tuesday the 13th is the 62% time retracement of this advance, and that's typically near the extreme of a corrective decline. So that's really only 2 more days potentially sideways to down to finish this wave B. It could go longer, but we certainly are going to be looking real closely beginning Tuesday for a potential corrective low. So why do we want to identify a corrective low? Well, if this is just a wave A advance, the first section up, we're making a corrective decline within the higher time frame bull trend. We want to identify when a correction is complete so we can participate in the major trend. In this case, it's the bull trend over the next week or so, maybe as much as 2 weeks. So there's probably not a lot on the downside if you're a short trader, unless you're real short term. But boy, the setup is going to be following the next corrective low to continue in the higher time frame weekly bull trend to test or exceed this wave A high, potentially reach up to the 78.6% retracement. So one key time factor to keep in mind is on November 20th. That's in the U.S. That's our Thanksgiving week. It's holiday week. And there's some other weekly time factors for the week ending November 23rd. So more than likely, following this few days of a corrective decline, then the ES is going to be sideways to up into the week ending November 23rd till around, I think the week begins on the 19th or something, so around 19th or 20th. So that's information you can use. What would void this idea that we're making a corrective decline and we're going to continue to a new higher? Well, a daily close below the 78.6% retracement at 26.48, I would just call it 26.49, would signal that more than likely this is not a corrective decline, but it's resuming the bear trend. But all of the technicals suggest we've got another 2 to 3 days sideways to down, probably reach around the 50% retracement, and then that bull trend is going to continue in what we call a wave C to test or exceed this high. So that's a strategy you can begin preparing for and looking for the technicals that will identify the end of this corrective decline. Well, that's it for this week. I hope you have a fantastic week and use this information to make some trading decisions. Be back with you next week on Saturday with our YouTube update. And if you like what you learn and the information you get from our YouTube videos, check out our regular reports. We have much more comprehensive videos with trade strategies twice a week in our reports, and we have daily updates, and especially we had trade tutorials every week as well, besides just our updates. So a lot of information, very low price. Check it out. Subscribe to our YouTube channel at the least, and we'll be back with you next Saturday. Take care.